Introduction to money laundering. Introduction to the module. In this module, you will learn what money laundering is and what the 3 stages are. In this module, we will cover: what is money laundering? Turning bad money into legitimate money. How is money laundered? Why are AML efforts important? The 3 stages of money laundering: placement, layering, integration. What is money laundering? Money laundering means bringing money earned from crime into the financial system and making it look legitimate. Criminals earn money in ways that include selling drugs, pimping, racketeering, embezzlement. It is illegal to transfer or accept money earned through criminal activity. The original crime is called a predicate crime. Using the financial system. People who earn money illegally still need to deposit the money in a bank. Depositing the money lets them keep it secure, move it around, possibly across borders, spend it legally. Depositing large amounts of money can look suspicious. Someone might ask where they got it. In the case of drug dealers, for example, customers pay in cash. It would seem even stranger to arrive at a bank with bags full of money. Therefore, criminals find ways of making their money look as though they had earned it legally. Turning bad money into legitimate money. It is illegal to knowingly convert or transfer money that comes from criminal activity. For example, if the partner of a criminal deposits dirty money in their account, knowing where it comes from, they are breaking the law. If a bank knowingly accepts the proceeds of crime, they are acting illegally too. Money must appear legitimate to be usable. We will look into how people do this below. How is money laundered? Using front businesses. One way of laundering money is to buy or create a legitimate business. Example: a drug dealer has 2 sources of income: selling drugs and running a laundrette. They can make it appear that the money comes from the laundrette. Other examples that criminals use to launder money include arcades with slot machines, car parks, car washes, restaurants, takeaways, bars and pubs, strip clubs, casinos. This list is not exhaustive. However, these businesses have one thing in common: they handle large amounts of cash. In the case of international drug trafficking, another way of laundering money can be to use illegal brokers who convert one currency into another. Why are AML efforts important? Money laundering enables organized crime groups to continue committing crimes, some of them violent. Furthermore, terrorist groups launder illegally earned money to finance their activities. Seizing their money takes away some of their power. Businesses that launder money also inflate their profits, enabling them to undercut legitimate ones. The 3 stages of money laundering. There are 3 stages to money laundering: placement, layering, integration. This is a simplified explanation. In practice, the stages overlap. Placement. Placement means bringing the money to the financial system. Ways of doing this include disguising money as legitimate earnings and depositing it in banks, depositing amounts of cash that are below the reporting threshold, converting it to foreign currency or cryptocurrency. A criminal is most likely to be caught at this stage. Police bodies use methods that include requiring suspicious activity reports from financial institutions, cross-border declaration rules, currency transaction reports, vertical analysis, comparing the business to other similar ones. Layering. Layering means creating layers between the crime and the money entering the bank. Launderers usually move money through several wire transfers or several offshore accounts or shell companies. These steps make it difficult and time-consuming for authorities to track where the money comes from. If a criminal realizes someone is watching, they can move the money again. Offshore accounts and shell companies. These are legal entities that have no office or employees, but do have assets. Having an offshore account or shell company is not illegal, but some people use them to avoid tax or launder money. These accounts are often located in a different country or territory to the owner. They favor territories that offer high confidentiality. Examples include the Cayman Islands and Panama. Integration. Integration is when the cleaned money comes back into the economy. Then the launderer can use it as they choose. Some steps they may take at this stage include faking invoices or loan repayments to show where the money has come from, appearing to invest the money in a business, selling properties or vehicles bought with the dirty money. When combining dirty money with legitimate earnings, it is necessary to overstate how much the business is making. Summary: criminals create ways of making the money appear to come from a legitimate source. Criminals may use currency conversions or businesses to act as a front for their money. The three stages are placement, layering, and integration. Placement is bringing dirty money to the financial system. Layering means creating layers between the money and the individuals. Integration means using money